Larry is an old friend of mine and of Steve's, and we all love him. He is a growth guy, and so he's going to be prone to find that. I mean, the first quarter of this year, the growth rate was 2.2%, and the growth rate in 2017, 2.2%, modest. We had a good quarter. I hope he's right that that's going to continue, but I don't know to call that the biggest story of the year when a lot of people think some component of that was just everyone rushing to get the exports out the door before the tariffs came in, I think would be a little bit of a stretch.
Steve, he said as well that there is a grand strategy on trade and a grand strategy with respect to trade with China. It seems like there are sort of countervailing impulses. We want to talk. That's what Larry Kudlow said. And on the other hand, we want to hit them potentially with up to $200 billion more goods covered by tariffs.
Would you mind if I went back to the earlier question?
Sure.
And I'll answer trade. I want to take specific issue with what Larry said about not covering the good story. We cover it every day here. We talk about the economic boom, the high GDP numbers. What we don't say, and by the way, listening to Larry, there's two Larrys there. There's the one who says it's the uncovered story, and then the one who acknowledges, the economist says, these are early days. And that's what we don't do. We don't go to the next step and say, you know what, this is done. We have raised the potential GDP level of the economy to 3% or 4%. What we're puzzling over, and like Austan, I hope Larry's right. I actually think there's a possibility he will be right. But I don't think in a 6-month time period, you change the DNA of the $20 trillion U.S. economy. I think there's a lot of debate right now. Are we in the middle of a sugar high, or are we in the middle of a changeover in the economy? So I want to put that aside and say we're covering this story. It's a big story, but it's not a clear story from an investment standpoint. You say, oh, the run rate of the U.S. economy is now 3%. Most economists say no. And then the countervailing fact to that is the trade story, which is how all of that pans out. And again, not two Larrys on this, but there are two camps of the administration. There's a camp of the administration that you listen to, and they want to put tariffs in place permanently. And you can see that in some of Trump's comments. And then there is another camp that says, oh, these tariffs are a means to an end. They're a negotiating tactic. And which one is the one I think that investors are kind of pulling with and say, okay, which one do we want to have here? Which one do we believe here? The one that says it's a temporary thing, or the one who says it's a permanent thing?
What do you think? What does Austan think? Austan, jump in.
Well, I think that's right. There are two camps. And unfortunately, Donald Trump himself is leading the camp that wants to get in a trade war. And you see his advisors, and look, Larry Kudlow is not, he's a pro-trade guy and always has been. And you saw him hemming and hawing and parsing of words, trying everything he could to get the topic off of trade war with China in that interview, because I think that the president wants to have a big public battle and is not under the impression that if we got in a shooting trade war, that it would lead both of us into recession. But the market knows that it would. And that's why we're counting on, we're hoping that somebody's going in there and pulling the pages off of the president's desk or whatever they've been accused of doing. We don't want them to start a trade war. But every time they take one step toward, let's have some trade negotiations, let's try to achieve something, let's try to get some allies on board with us to collectively go confront China, they then turn around and the Mr. Jekyll comes out and the president begins tweeting, I'm going to put $500 billion, another $1 trillion. And I think there's a big danger to the markets and a big danger to the economy, and Larry Kudlow knows that.